evening, everyone. So this episode is a quiet review about what happened previous week. This is my first successful 100 pips trade. Actually, this is two contracts, this one and this one. And after these two successful 100 pips trade, I made some corrections and refined uh, how did the price react in this previous week. So this is the corrected setup based on the price action the previous week. So during Wednesday, I tried to enter here. The price keeps on, actually is quite consolidating between this red line, which is the daily key level, and this one. And my first setup almost hit the stop loss, which is 60. So I adjusted the stop loss up to 60 because of this daily key level, and put some 4-hour buy stop level here, which is the Tuesday high, and this is the Tuesday low. So I put the marking here, and this is a 1 hour time frame, and we try to check the daily. So this one is the swing low, the daily key level, and this one is the other one, the swing low of the daily key level, and the breaker of the weekly daily range. So these two red lines, I use it as a range because I'm still bearish the previous week of the British pound, because the dollar is very strong. This one, I saw that the dollar was strong bullish, so I'm strong bearish to British pound. So let's go back. How did I get it? So first, and Tuesday, I saw this one, this swing low, which is the 1 hour level, 1 hour time frame, already broke. So it tries to go back to rebalance this breaker. So which is, if we try to use a Fibonacci, so it retests in this key level, which is 79 and 62. Though it's not, I'm not using perfectly. I'm not depending on the Fibonacci, because I'm practicing myself to focus on the price action, the breaker, and the retest area. So why it goes up here until here only? Look at the bodies of the candle. This is the 1 hour bearish candle. Before it goes down to break the swing low, it leaves the last up candle, which is white. So my next trade should be I should be looking for this before it breaks the swing low. I should also consider the last up candle, because sometimes I observe that after it breaks the swing low, it only reacts, it only bounce here, this white candle, this one. So it's still the same. It's here, the upper part. We just locate the body one, because it's more accurate if if we use the body of the candle, not the wicks. So it's still valid. So I enter very aggressively. uh, it should be here next time. At least I adjusted my stop loss with this daily key level, and it goes down, but still the first setup still not yet closed because the stop loss still there. It respects this 4-hour buy stop, which is the Tuesday high, and then during Wednesday it tries to go up again, respecting this bearish candle, which is the 1 hour, the swing low, the breaker. This one is also the up candle, and then I re-enter again. So this one is already a little bit correct, a little bit higher for this one. So I did not copy the 60 pips stop loss because I enter a little bit higher from the first one, and my maximum key level is this daily range, the red one. So I just put 50 pips stop loss, and then 100 pips, both entry 100 pips. Why I did not copy this take profit area? Because I want to respect myself in practicing and focusing the 100 pips, because last time after hitting the 100 pips it bounced back to regain the entry point. So I put an extra room for an error. That's why I respect the 100 pips stop loss. But still, I'm a strong bearish because from the previous week it keeps on going high. So yes, it is a strong bearish. So the main target is this one, and the price goes down and hits this swing low. Yes, it hits the swing low, and I'm happy that my entry was successful for the first time, and it's two contract, which is 100 pips each, so it's 200 pips. So I will show you guys that I found something here in a trading view, that there's a paper trade, that to prove to myself that I pressed the button. So here you will see to it. So here's my current one for euro. So this one, this 200 pips. So I made a $300 starting account. So I made some losses. This one with a 1% risk only. So because of that 200 pips, 100 pips each contract, I made $11. So though I was wrong in the previous two previous trade, I'm still recovering on my equity of $300 starting. So for me, it doesn't matter uh, how many losses you will encounter when you are practicing, as long as you respect your risk management. You keep on learning daily, each week, because me, for myself, I am practicing to become a swing trader. I only maybe maximum of three three contracts each week, so that's good for me as long as I hit 100 pips or 70 pips or 50 pips. That's good for me already. So there's nothing wrong about making mistakes, and I'm a little bit, I mean, I am very happy about the result. This December trade, though my November and October are a little bit shaky, but I've learned many things because of that mistakes. Because of those mistakes, I made this two contract successful. So these other contract, these other setups, guys. These are the corrected how the price reacts, how the price move. So I made already a roadmap to make another setup in this current week, but today is Monday. I disregard this day because this day is a little bit shaky. It tries to reach the highest high and lowest low of the day, and I'm not participating in this particular day, so maybe Tuesday or Wednesday to until for Friday. For now, I'll try to check the dollar, what is happening, because I use a dollar as my base to see if I'm bullish or bearish on British pound. As of now, still the dollar is still bullish. I'm expecting this weekly buy stop to be taken, or it tries to reach this daily liquidity. So it depends how the price reacts, because this one is a very strong key level, which is the weekly. So maybe it will just touch higher, just higher of it, and then try, and it will goes down, because today is this December is the last month of the year, so maybe the it will just be a correction, or I don't know about it. We'll see to it how the price reacts. So this one serves only as a roadmap for me, not to confuse, not to forget the previous week market structure. So that's how I train myself in making a roadmap. But if the price tries to go down here and then break the swing low uh, until here, this area, and then rebalance this area, then I will change my trend to bullish in the British pound. So as of now, this current week, I'm still bearish. Maybe the price will just hit this swing low just to touch this sell stop and then goes up. So that's how I train myself. It's been 2 months already, and then this is my first time to achieve these two contracts 100 pips. This one is the corrected one, guys. 140 143 pips all in all. The price still goes down here to touch this weekly breaker daily range, so it respects this one. It chases below this old swing low in the daily, and then correction uh, rapidly goes up. It started in the Monday price action. So See you in the next week, guys. We'll see to it if I can make I can make an entry or no entry at all, because I will not force myself to make an entry if I don't understand the price action. So I will just leave the price itself if I cannot understand the story behind the price action. So this for me, trading is like this. You need to understand the story behind why the price go that particular area, not just it breaks swing high or swing low. You I need to understand also why it breaks that swing low or swing high, or maybe it will just reach the swing low or swing high, just a correction, but the main trend is strong bullish or strong bearish, with a correlation with the dollar index as my baseline. So I'm happy about myself for the consistency and discipline uh, with a proven practice that I press the button, and also with recorded mistakes. So if somebody will watch this video, maybe it will help you also in developing your skill, or it will add up on your strategy soon. I'm glad. God bless us all. Have a good day. Enjoy your day and trade at your own risk. Um, Start a paper trade. Don't put real money first if you're not sure about your strategy, and just enjoy the process. Have a good day. Take care, guys.